So the housing market is shifting, and it is shifting pretty fast, right? And that's because the housing market is much more dynamic than we tend to give it credit for. There are a ton of different variables that could shift things around. And so depending on whether you're looking to buy or whether you're looking to sell, the information in this video may be good news or it may be bad news, right? Again, we also have to take into account what time horizon you're looking to do whatever you're trying to do. So we're gonna go ahead and cover a couple of things in this video. So according to the Federal Reserve Economic Data website, we saw that around 2022, there was a bit of a change in the housing market, right? We saw prices go down in a lot of areas in the country. A lot of different cities, a lot of different states saw major declines. However, I do wanna emphasize that as we watch this video, real estate is very local, right? The housing market is very local, and so what may be happening on the west side of the country may be completely different from what's happening on the southeast or on the northern east, right? You know, places like New York, Florida, California, completely different. So I want you guys to take that into account as we kind of parse through this data. Now, according to the National Association of Realtors Pending Home Sales Index, we saw that just last month, we see pending sales actually decreasing, which means that actually homes that are being placed for sale are actually being bought up more quickly, and we're seeing prices slowly climb up again. So we're actually seeing things change once again. And so that's one of the things I want to mention, that, you know, like I said in the beginning of the video, the market's very dynamic and, you know, it's very seasonal, and there's a lot of variables that can change things from going down and up. And so I want you guys to really watch this video in its entirety because there's a couple of things we have to cover. So one of the reasons why we're seeing pending home sales decline and we're seeing prices climb back up again is simply because of low inventory. See, one of the rudiments that tie really deeply into real estate is simply supply and demand. If you have low supply, then you're gonna have demand kind of build up, and what is that gonna do? That's gonna make prices slowly climb back up again. So we're starting to see that the narrative is starting to shift a little bit, right? So back in 2022, what did we have, right? We had inflation at 40-year all-time highs, and what did that cause? Well, that caused the Federal Reserve to go ahead and hike the federal fund rate at the fastest pace it's ever done in decades, right? And so everything has sort of a chain of events where, you know, we have inflation high, we have the Federal Reserve try to combat, you know, inflation with the tools that it has in its tool belt, and what does that do? Well, that causes mortgage rates to go up higher, and so what happened was a lot of buyers were shaken out of the market. However, the narrative is starting to shift a little bit, where now we still have, you know, mortgage rates still at, you know, high levels. However, we're kind of going back into the fundamentals of supply and demand, where we have low inventories and people are still looking to buy a house. Now, the National Association of Realtors chief economist said that the lack of housing inventory is a major constraint to rising sales. Multiple offers are still occurring on about a third of all listings, and 28% of homes are selling above list price. Limited housing supply is simply not meeting demand nationally. Now, the chief economist for the National Association of Realtors went on to say that sales in the second half of the year should be notably better than the first half as job gains continue and more favorable market rates are expected. Now, although the data is showing us that prices are slowly rising back up again as there's an issue with inventory, I do have an issue with what the chief economist for the National Association of Realtors said. See, he mentioned that in the second half of the year, as job gains continue and more favorable market rates are expected, you know, we're probably going to see prices go up. However, you have to pay attention to the macroeconomic environment. And so maybe the second half of 2023, we're probably going to see prices continue rising. However, we have to, again, look at everything that's going on because everything is interconnected. Now, looking into the recent job openings report, we're seeing that job openings are actually decreasing. Now, the reason why this is really important is because job openings are a leading indicator, right? Because it starts off with job openings being trimmed down and then it goes into layoffs. And we're already seeing layoffs, but if we're seeing job openings get closed, well, that suggests that, you know, layoffs are more likely to occur, right? So the job openings report is a leading indicator for unemployment. So the National Association for Realtors chief economist is saying, well, the job market is really strong, it's really robust, and so it's probably going to do well going forward. However, However, you can't really extrapolate data like that because, as I said in the beginning of the video, things are dynamic in this market. And so what we're seeing is that trends change. And although the job market's really good, we're probably going to see more job cuts, especially as the Federal Reserve starts hiking, more, or continues hiking, right? Or even if they pause, that still means that rates are going to be high. And then going on to the second point, he mentions that mortgage rates are going to get better, right? Well, here's the thing. We're not really seeing any indication from the Federal Reserve that indicates that they plan on cutting rates just yet. They're saying that they still have to hike and then possibly talking about pausing. And even if they pause the rates, that doesn't mean that the rates go down, right? Because first they have to start cutting the rates. And so we have this big issue with inflation that is really causing things to kind of just go crazy all over the place. And so that's why I don't 100% agree with the chief economist from the National Association of Realtors. Yeah, maybe prices may continue in the, towards the end of 2023, but I'm looking forward into 2024 when we see the macroeconomic headwinds actually take place. Now, for those of you guys watching, you may be wondering, well, Justin, how do you know that the Federal Reserve isn't just going to cut on the next meeting? Well, here's the thing. I pay attention to what's going on with the inflation rate and also the unemployment rate. And one of the things I want you guys to take a look at is that, unemployment is still extremely low. Now, this is actually pretty bad, making the Federal Reserve's jobs harder. Now, I know some of you guys may be watching this and wondering, well, what does it mean? How is it bad if, unemployment's low? A lot of people are working. Well, here's the problem, right? This contributes to inflation because of something simple in economics called the Phillips curve, right? Now, when you look at the Phillips curve, you see that when there is a low level of unemployment, there is a high level of inflation. Now, the reason this is because when there are a ton of Americans working, getting their paychecks, well, what do when they get paid? They continue spending. And so this is why inflation is still sticky. And even though the Federal Reserve is hiking the interest rates, inflation isn't really coming down. And so the Federal Reserve is going to have to continue being more aggressive, which is going to make things much more harder for, sellers, as mortgage rates are still going to stay elevated. Now, time and time again, when you parse through what the Fed chairman of the Federal Reserve, Jerome Powell, is saying, we constantly hear him saying that inflation is an issue. And although the job of the Federal Reserve is to make sure that there's price stability and maximum amount of employment, it's kind of contradicting because they kind of need unemployment to rise to make, price stability actually happen, which is why, he was getting pressed by, members in the Congress, especially Elizabeth Warren, when she was mentioning, hey, do you want a bunch of Americans to lose their jobs? And he kind of sugar-coated around that by saying, kind of, right? So this is why, although data is pointing towards prices going up higher towards the end of the year, when we look forward into 2024, it may be a completely different story. Now, real quick, I just want to slow down the pace of this video right here because I just wanted to give you guys a friendly reminder that if you are not subscribed to the channel and you do see value in my videos, consider tapping that subscribe button, as it does tremendously help out the channel. Also, I want to let you guys know, for anyone that is looking to buy or sell in the next coming year, I do want to let you guys know that I am a licensed real estate agent in the state of Florida. So if you guys are looking to buy or sell, you could definitely get in contact with me. I will leave my email in the description of this video, and I'll probably post it in the comment section. And even if you're watching this video and you are watching this from a different state, feel free to contact me because I do have exposure to some of the best real estate agents around the country. And so I could, just refer you to one of the top agents in your market. So definitely, go ahead and get in contact with me if you are looking to either buy or sell within the next year. So if you're looking to buy a home, well, unfortunately, prices are still high and they are actually still climbing up higher. So unless buying a home is a necessity, perhaps you may want to wait till a year and a half later where maybe there's going to be more inventory, or perhaps we finally start seeing rate cuts in the federal fund rate, or maybe, just maybe, a possible recession which could cause selling prices to capitulate, right? So, of course, if you need to buy a home and you need to get into a home now, then do what you need, do what you must. But if you can wait a little bit and, hold off, well, then that's another option for you. But for individuals that are looking to sell, my recommendation is to definitely take advantage of a hot market. If you're looking to sell, I wouldn't recommend just selling your house just for the sake of it, because if you need to sell your house and buy another house and rates are high, well, then you got to really just do the math for what financially makes sense for you. But if you are looking to get rid of a property, make sure to sell obviously in a hot market when there's low inventory and there's a ton of demand, because you're most likely going to sell at the price that is top dollar or even higher just because of bidding wars still taking place. However, as I mentioned in the beginning of the video, every market is local and every market's going to be different. For example, in my market, Florida, it's still a very hot market. And in fact, while in 2022, when every other market or most markets were actually declining in prices, Florida actually stayed pretty stable and actually slightly increased simply because of migration, right? There's several different variables that could impact your market. But one thing I can say for, my market in Florida is there is a ton of migration, right? And one of the major contributions to migration is simply weather. I mean, every time I go on vacation, just a while ago, I was in Chicago, it was 19 degrees, it was very windy, and every person I talked to just mentioned how they would love to move to Florida just because they're tired of the cold. And being honest, if I was in Chicago that long too, I would probably want to, move to, area where there's hotter weather. So of course, as I mentioned, every market's local, and so everything's going to be different, right? The numbers I mentioned in this video are, national numbers, but if you want to niche down and look into your local market, you have to look at what variables could really change things over there. But with that being said, guys, hopefully you enjoyed this video. Make sure to watch this next video right over here, and I'll see you guys on that next video. Take care, guys.